Folks, we have an urgent warning for all investors out there. Please listen careful. There is a trap being laid for you today, and it's going to be an all-out war on your psyche. Please pay attention and watch to the end of this video. This is going to be very, very important. Now, as you have noticed, over the past few days, well into the weekend, the Trump tariffs on Mexico, Canada, and China have been the talk of the town, so to speak, and everybody is obsessed about it. And what it's going to do to the economy, what it's going to do to the stock market, how everything is going to change. And I promise you that today, there's going to be a full-on assault on your brain and your emotions by everybody who will profit from this and actually not so much care about what happens to you and your money and your investments. So pay attention. Over the next 48 hours, you're going to have a lot of mainstream media coming out with panic, fear, everything to get you to watch. You're going to have social media, YouTube. You'll have all these YouTubers basically doing the Home Alone face, talking about the end of the world, do this ASAP, while actually not giving you any sort of valuable insight into anything. It's all a war on your psyche to get your attention so they can advertise, sell ads, and you are the product and you're not getting any value out of it. Now, luckily for me, I don't make money really from this. I have my Patreons, I have my Academy. I don't care if anybody watches these videos. I have 10,000 members who pay $35 per month. I have Stock MVP with 10,000 members, and you can do the math and you can find out that it's a lot of money. So I don't need YouTube ads to survive. Thank God. I also invest in Palantir since 2020, so I'm doing very well for myself, and I don't need to push advertisements on YouTube in order to get some attention from you guys about the panic. So let's just all settle down and talk about what's going on, what's the plan, what's the strategy. Let's keep a level head about this, and let's all be clear and absolutely analytical about this and not emotional. That's the key part here. Now, believe it or not, Donald Trump did not invent tariffs. This thing existed for a long, long time. The idea is very simple. A tariff is nothing but an import tax. Basically, this means that if you bring things to my country from your country and there's a tariff, you have to pay an import tax to me. So in this case, Canada, Mexico, and China, when you bring goods from those countries into the United States, now you have to pay an extra tax to the US government, an import tax. Now, these are usually protective measures. They're used in order, historically, to protect your own production in your own country. If your producers, your factories are not able to compete with China because China is just so darn cheap, you apply these tariffs and then you kind of give a level playing field for your factories to compete with the Chinese factories. That's the traditional ways tariffs have been used in the past. But this is a whole new ballgame because this is not what these tariffs are about. These tariffs are leverage. They're power play by Trump to get China, Mexico, and Canada to negotiate a better trading deal with the United States. And the price actually for these things are going to be borne by you, me, and all the other consumers because tariffs are not borne by governments. Make no mistake about it. They're not borne by producers or importers. Eventually, tariffs are rolled on to the consumers. So this means that the consumers will pay. And it's going to be inflationary because prices will go up. There's nothing you can do about it. You can't stop it. It is what it is. Anybody who's telling you fairy tales about how this is not inflationary is basically blowing smoke up your butt. Now, believe it or not, this is not the first time we've been through this rodeo. Back in 2018, Trump version 1 actually imposed tariffs on China. And that thing ended up very, very negatively for the market in the short term. A lot of volatility, a lot of panic, a lot of fear, a lot of selling. The market eventually dropped about 20% within a few months after those tariffs were imposed. So the market in the previous iteration of the Trump tariffs dropped almost 20%, basically being on the verge of a bear market in 2018. Now, the good part about this, that this was very short-lived. It took a few months, and then by the end of 2018, the beginning of 2019, the recovery started, and by mid-2019, just a year later, we were at new all-time highs again. So, this was just a blip on the radar, a bug on the windshield, whatever metaphor, analogy you want to use. It took less than a year for this thing to fizzle out. Now, for a lot of you, you might say, well, Tom, a year is a long time. It is a long time if you are a trader. If you're investing in companies for the next 10 years, that year actually made people a lot of money because when the market dipped, People bought all these great companies at a discount, and when it went back up within a year, they all improved their cost basis, making them generational wealth. Now, again, the short-term pain the tariffs have caused us back in 2018 and the insane volatility we've seen, they're not sure to come back this time. The fact that this happened in 2018 and the fact that history played out this way in 2018 doesn't really guarantee us that this scenario is going to play in the same way. Lots of different factors, lots of different parameters here. So there's no guarantees that this time we're going to see another 20% drop and then, within a year, complete recovery. Nobody knows how this thing is going to play out. And if people are sitting there pretending to have a crystal ball and drawing some charts on some numbers on, all this crap, pretending to tell you, oh, we know how this thing is going to play out, they don't. They're a bunch of hooey crap sellers who just want to sell this trash in order to get you some sort of a confidence as if you know what the hell is going on or you have some sort of control. You don't. We don't have any control, right? Now, this time, actually, the things, sadly, are quite worse than 2018 because in 2018, if anything, this was just China, right? This time, we're talking about China. We're talking about Mexico. We're talking about Canada. The combined value of imports from these countries to the United States is $1.6 trillion of goods every single year. That is a lot of goods. It's bigger. It's nastier. And this time, it's a lot more complicated than the 2018 tariffs. China is the world's factory. Canada is the number one partner vis-a-vis the United States as far as trading. Mexico is huge sourcing for the United States for a lot of stuff, automotive parts for once, but there's a lot of stuff, agriculture, you name it. So is everything going to collapse because of these tariffs? Well, not necessarily. And allow me to shed some light on what actually is going on here. So number one, nobody knows how this thing is going to play out, right? When you have a complete consensus in the market where everybody's convinced that the stock market is absolutely 100% going to do something for certain vis-a-vis this market, we're talking about a horrible crash because of tariffs, and everybody is convinced that the crash is coming right now, and it's a consensus. More often than not, when everybody's convinced that the market is doing one thing, the market wakes up, bitch slaps you, and essentially does the complete opposite without rhyme or reason or any sort of logic, right? We've seen this play out many, many times. So the one thing that I'm kind of encouraged about is the fact that the consensus about the crash is here, which means there's a chance that this thing is going to flip on everybody. Now, I wouldn't get too caught up on this. This is just a general insight, but look at the bigger picture here, right? Number one, the negotiation just started. Trump fired the first shot. Canada is going to get pissed off. Mexico is going to get pissed off. They're all going to get insulted. They're going to slap their own tariffs, and we're going to go to the negotiation table eventually because this is not going to trade all its way into a huge trade war between these three countries because everybody loses in a trade war. Now, the one thing to remember, if you look at Canada versus the United States, the rhetoric we've heard over the weekend was very harsh. Some tough words from the actor who they have as prime minister over there. Some tough words about, we're not going to do... Okay. Let's put things in perspective. Number one, the United States have 10 times higher GDP than Canada. And more importantly, the Canadian market exports its goods mainly to the United States. The United States is the export destination for Canadian goods of 70% of Canada. So Canada's main export destination is the United States. 70% of exported Canadian goods are sold to the United States. So if you compare the flip side of it, about 12% of US goods are headed to Canada. So if I have a 10 times bigger banana, I'm your pretty much only customer or your biggest customer, 70% of your business is dependent on me, the leverage that you have and the leverage that I have is completely different. So I say that as long as this thing is managed correctly and as long as Trump doesn't do anything crazy, he has a lot of leverage over Canada, definitely over Mexico. China is a whole different enchilada. Let's leave China alone here. And that's kind of the flip side of this because China can actually match the United States in these conditions as far as export-import size and all that. But that's, I think, with China, just the beginning of a very lengthy negotiation where both sides are going to figure out a deal. So this thing might be resolved within a month, within a week, within 3 months, nobody knows, but it might be politically resolved, basically rendering this whole thing irrelevant. Now, number three, You have to understand that whatever happens long term, short term, we do have lots of added risk and uncertainty to the market because of these new tariffs. Because now, all of a sudden, the market is faced with lots and lots of uncertainty with how this plays out, whether this leads to a full-out trade war, whether this leads to an inflationary spike in the United States of epic proportion or just a mild inflationary spike. A lot of uncertainty, a lot of risk. Markets hate uncertainty. Markets hate risk. So the short-term reaction, because of the added uncertainty and the added risk, has to be negative from the market. But this means nothing about what's going to happen long-term. Now, on top of it, obviously, there's going to be inflationary impact on U.S. manufacturers. Now, with the exception of people who manufacture steel in the United States, pretty much everybody is acquiring and sourcing materials in China, Mexico, Canada. So the cost of goods of U.S. producers is going to go up. The price is going to go up. Everything is going to go up. It's going to be inflationary. It's going to be unpleasant. But long term, the markets will adapt because these manufacturers are not going to just sit on their thumb ignoring this and saying, oh, well, they're going to do what every good CEO will do in this situation, reconfigure their supply chain. If they can move certain factories to the United States in order not to pay a tariff, they'll do it. We've heard a few Canadian companies already moving production away from Canada to the United States. If they can reroute their supply chains through countries where we don't have a tariff, they'll do that. They'll find legal loopholes. They find lots and lots of strategies to get away from these tariffs, just like they did in 2018. And by the end of 2018, the beginning of 2019, the whole thing was pretty much over. And by mid-2019, the market was at all-time highs. This is not a career-ending event for the stock market. This is not the end of the world. Far from it. Now, if this thing actually drops because of the fear, the panic, and all that good stuff, there's only one thing you can do in this situation, and that is have a plan, right? We talk about it in our videos all the time. We talk about having a plan, understanding what the situation is, and this is no different. You have to understand that if nothing changes for the companies you're interested in investing in, and the price all of a sudden is lower, that opens up a lot of opportunities for you to buy companies at a discount. And based on our system, we buy when our companies are at all-time highs. We buy when companies are at all-time lows. We buy a little bit every single month at all times for a long, long time. However, if a company drops below 20% off the 52-week high it had over the past year, well, in that case, instead of buying a little, we're going to buy twice as little. So instead of buying 100 every week, we'll buy 200. And we're going to continue doing that as long as the price remains 20% below the highest point the stock has been for the past year. So this thing, for me, is just a very simple equation. If nothing changes and the stock market keeps flying despite the tariffs, well, just DCA is normal. But if the stock market collapses the stocks I'm interested in, well, I'm going to look at the math. I'm going to look at my Excel spreadsheet. That is, I'm just going to continue to DCA. But if any of my stocks dips below the 20% threshold, I'm going to double down. Now, here's the thing. I said in the beginning that this is a trap, and I haven't provided you an explanation why this is a trap. And I can show you with numbers. And if you've lasted this long, you deserve to hear this explanation. Back in 2018, we had the same trap. The market dropped 20%, lots of panic, lots of fear. But let me give you a few examples. If you bought Tesla in 2018, when the market crashed, you bought Tesla at $20 a share. Right now, Tesla is 20 times higher at $400 a share. That's a 20x on your money in 6 years. If you bought Microsoft, same time at $94, now it's at $400. So you 4x your money on Microsoft. In 2018, if you bought Nvidia at that time, $6 per share, it's currently at $120 per share. That's a 20x in 6 years. Even Apple, who was already a mature company in 2018, if you bought it on the dip at $40, it's now at $240. You have 6x your money even on Apple. And forget it, just if you held the S&P 500 and nothing else, and you just bought it in 2018 during the dip, you have doubled your money in 6 years by just sitting on the S&P 500. So the trap is that a lot of people are going to panic out of this market, and they're going to miss out the whole point of dollar cost averaging. The whole point of dollar cost averaging is using the dips to increase your holdings and lower your cost basis in these stocks. The trap is that the fear and the panic, they prevent you from doing the right thing, and you do the opposite of what you have to do in a dip. Now, Why am I so sure that the market is going to continue going up over the next year, 2 years, 3 years? Why this isn't an all-out crash like we had in the dot-com bubble, for example, right? Everything is overvalued, valuations are crazy, etc., etc. But, well, because they're not. Show me the crazy initial public offering activity in the market. Show me the feeding frenzy. Show me the IPOs. There's none. Show me the 300 PEs on the largest companies in America. Apple is trading at 37 PE. Nvidia is at 40 PE. Microsoft is at 33 PE. Yeah, sure, we have outliers like Tesla and Palantir. Sure, their PE is out of this world. But the biggest companies in the world in America, the tech companies, the Microsoft, the Apple, the Nvidias, they're not trading at crazy PEs. Nvidia, who's the hypiest company in the market right now, is trading below 50 price to earnings. And if you look at forward PE, it's even lower than that. And even if you look at the patterns that happened that led to the dot-com crash, the dot-com crash, the origin story started back in the end of 94 with the launch of Netscape, which was kind of the beginning of the internet, right? And it took the market 5 years to get to a crash in late 2000. And the S&P 500 from 94 until the crash started went up from 1,000 to 2,700. That's 270% on the S&P 500 in just 5 years. The cycle took 5 years. The S&P 500 did 270%, and then we crashed. Well, if ChatGPT is the equivalent of Netscape in this story, and the launch date was end of 2022, we have until 2027 based on this math. And right now, we're about halfway there. And if you look at the S&P 500, yes, it did 60%. 60% in those 2 years, but that's a far cry from the 270% we've ran up on the S&P 500 before the dot-com crash. So, on top of that, beyond the numbers and the stats, look at the actual secular tailwinds we have right now in this market. Artificial intelligence is changing everything we know about business, and humanoid robotics are going to change everything we know about manufacturing. This is a once-in-a-generation industrial revolution that's going to happen here. In fact, it already has started, but it's nowhere close to being over. And to say that this thing is going to be over because of a tariff? I don't think so. But then again, we don't know. Nobody has a crystal ball. So if you disagree with me, if you think otherwise, comment below. Let me know your opinion. I would love to hear a different opinion, a counter opinion. And at this point, I usually invite you to join our academy, but this time I cannot. The academy just reached 10,000 members, which is insane. It's a huge milestone, but for that, we have to stop. The academy is currently closed for new enrollments. It's not going to be open for a while until we build a whole new infrastructure to handle all this mass of people. This ain't a cash grab for me. I want the experience to be great for the academy members, so we're going to take a pause here. Now, if you actually want to be notified when the next time we'll have more academy spots, you can join the community at Discord. There's a Discord membership option on our Patreon. You can sign up that. It's like $5 a month. You can join as a basic member. Lots of different options, because the priority for new academy memberships once we reopen is going to go first of all to the community and then to the YouTube viewers. So you can check that out. You can join. Would love to see you on our Discord. Lots of great conversations there. And thank you again. Relax, breathe. Everything will be fine. Don't panic. Don't go crazy. Just eat some popcorn and watch the stock market burn. I'll see you next one. Peace.